If we take the prohibited activities you need to know for the SIE, we can split them into two categories: those that a registered representative can't do, and those that nobody can do. We get the acronym Gossipable Vipers. For this video, we're going to focus on the registered rep side. We start with guarantees. There are no guarantees in finance. You can't guarantee a profit, you can't guarantee a loss. On the off chance that you do have to say the word guarantee, like with a guaranteed bond, you have to tell the client exactly what that guarantee means. Just so you know, a guaranteed bond means that the third party is going to cover the interest and principal if the issuer defaults. Omitting facts or lying. This can be called misrepresentation. You must disclose material information to clients. You can't sell a mutual fund without explaining that there's a load or a CDSC. Selling away is when you solicit a customer to buy a security not held or sold through your firm. It would be like if a customer who really wants to invest in OpenAI, but OpenAI is still a private company. Your firm doesn't allow the transaction, so you go find another brokerage who could get shares. You use that brokerage to sell the customer the shares, and you get compensated on it. That would be selling away. You can't do it. Sharing in profit and loss. In 1916, Benjamin Graham, who was Warren Buffett's mentor, got his start in the business by sharing profit and losses with customers. Graham's old college professor gave him $10,000 to invest. They split the profits and losses 50-50. So if Graham had turned the $10,000 into $20,000, they'd each get $5,000. If Graham turned the $10,000 into $7,000, Graham had to put in $1,500. This type of relationship is prohibited now, as you can't share in gains and losses. The only exception is if you open a joint account with firm approval. Then you get to participate in the proportion of that which you put into the account, or if you have a joint account with a family member. Improper use of funds, which includes unauthorized trading. You can't move money out of a customer account without customer approval. You can't place a transaction in a customer account without approval either. Now, customers can give you trading discretion, but this must be obtained prior to placing a discretionary trade. Pay-to-play references MSRB Rule G37. You can't make political contributions to get municipal's underwriting business. $250 max political donations, and you must be able to vote in the candidate's election. The 250-pound politician can help you remember. Abusive trading refers to practices like churning, front-running, or cherry-picking. Churning is when you create activity in a customer's account just for the purpose of generating commissions. Front-running is when you place an order ahead of another order to get a better price. For example, you get an order to buy 100,000 shares of XYZ. You know that's going to make the price go up, so you place a buy order of 1,000 shares in your own personal account first. Then you follow that with the 100,000 share order, so you would get the benefit of the price increase. Cherry picking would be like if you bought 10 stocks on the day. At the end of the day, you see that 3 went up and 7 went down. So you put those 3 in your personal account and the other 7 to customer accounts. Breakpoint sales. This is when you get the customer to buy an amount just below a breakpoint on a front-end load mutual fund. Say there's a breakpoint at $100,000, but you have your client buy $98,000 worth. You do this because the commission on $98,000 gets charged a higher rate, resulting in a higher commission than if the customer had just bought $100,000. You need to at least inform them of how close they are to the breakpoint and the ability to add a letter of intent. Lending to or borrowing from clients. There are 2 groups of exceptions. You don't need approval to borrow from immediate family or a customer in the lending business, like a bank. The second group you can borrow from, but you do need written firm approval. These include coworkers, people you have a personal relationship like friends, and people you have a business relationship with outside the broker-customer relationship. For example, if you're a joint owner in a restaurant, you could borrow from a partner. Excessive gifts. Gifts to registered representatives and gifts from registered representatives to clients cannot exceed $100 per year. Now, there is some discussion that this could go up to $250 or $300, but at the time of this recording, it's still $100. So could you give a customer a $150 coffee maker? No. Could you give a customer a $99 coffee maker? Yes. What if you gave the customer a $99 coffee maker and a $20 bag of coffee beans? No, that's over $100. What if you give the customer a $99 coffee maker in March and then a $20 bag of beans in December? No, it's still the same year. The exceptions to this rule include gifts for life events like weddings and graduations, Promotional items like a pen or a bag with your company logo on it, but they do have to be reasonable. You can't give a customer a car with the magnet on it of your firm's logo. Say that's a promotional item. You can also spend over $100 on entertainment with the client. So can you buy $5,000 Super Bowl tickets and give them to a client? No. Can you buy $5,000 Super Bowl tickets and go with the client? Yes, that's entertainment. Those are the prohibited activities for registered reps that you need to know for the SIE. If you have any questions, leave them below. Otherwise, let's go on to the next video.